Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. Okay, we'll start off with the daily chart. We talked about the potential for this move to 1775 to be a pronounced higher low versus the 2775 from back on August the 6th. What would finish that move off would be a higher high versus 2944 quarter, and they're certainly trying to reach for that. We're bumping into the red line here, which is your 50-day exponential moving average. That was a problem here. Let's see if it ends up trying to be a problem again. Your Globex high right now, 28.5. They put that in just after 7:30 Eastern time. Beyond that, you've got the daily mid-band up at 35. If it can clear that, then you got to deal with 44. If you deal with 44, then you have higher lows and higher highs on the daily chart, and then you'll see the really, really sustainable rally that people are wondering about. Right now, you've got a really nasty, solid 3-day bounce after a big day down, and you have some potential to run things back up to the highs, but that doesn't really make itself likely until you convert 44, convert that 50 in the process, convert the daily mid-band in the process, then you can see it start to reach. I think that'll chase a lot of weak shorts right out of this tape, the ones that haven't been chased out already. The alternative theory is it's just another bear market-y type bounce after the big drop. I don't know. I stopped assuming that the bears can accomplish things a long time ago. I think shorts are certainly counter-trend in this tape. We've been very successful. I mean, it's been great volatility. It's been great trading. We had a couple of really nice longs on Friday, put together a really big week and a big month, and that's what volatile markets will do if you're a trader. You got to be careful though, just blind shorting this thing because, quote, you think it's gone up too much, or it's due to come back. Sure, every market will come in. The only question is, where is it going to come in from? And nobody knows the answer to that. So until the bears start to convert areas that they need to convert, and as we head over to the hourly chart, a good start would be the new weekly pivot at 84.5. If the bears can convert 84.5 to resistance, then we got something to discuss. If it goes like last week, they had a big test Monday, they popped it, they came back, and then they couldn't hold it late in the week, ended up over the top of the 80 and change weekly pivot. If they come back to it this week, they're going to have to avoid, and if it's going to get touched, it's going to get touched probably Monday, Tuesday. If they come back to it, which is pretty typical, they're going to have to break it, because if the bulls hold it, then on the daily, on the hourly, just about any time frame you choose, you're starting to have a series of higher lows. Here, bouncing right off the daily lower band. You pull back in and you test weekly pivot and you hold it and you make a higher high, well then, we're back to dealing with, here's your 44 quarter and beyond. Because that's the way it goes, the last 10 years when the bulls get the wind at their back and they establish a couple of areas of support, then that rising tide lifts everything up. All right, everybody have a great Monday. We'll have some more stuff on social. Check that out. Come check out the room. Come trade this vol with us. We'd love to meet you. I think you'll like what you find. It's a great place to trade. Trade them well. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.